Good evening, everyone. Welcome to the Lock in Your Success Trade and Market Update for July 21st, 2013. Before we get going, we'd like to remind you that any information contained in the presentation is for educational purposes only. We're not financial advisors or broker-dealers, and we are not making specific trade recommendations. Also, any trades or results covered in the presentation may or may not be live trades. In the event something is a computer simulated trade, we do the best we possibly can to make sure that it is accurately represented, and also the risk of loss in trading securities, options, futures, and forex can be substantial, so please be aware of all your risks prior to placing any trades. Also, if you're watching this on YouTube, take a look at our trading blog at www.lockinyoursuccess.com and join our mailing list. Also, take a look at the ROCK M3 and Bearish Butterfly video series. And as always, take a look at optionstribe.com as well. There's lots of great things over there. Okay, let's take a look at the markets. I'd like to start with the SPX. When we were talking last week, we were expecting that the markets may roam a little bit higher, and I was thinking to previous highs, and they'd likely back off. However, we did exceed our previous highs, and we held it for a day. So that's a little telling in itself, indicating that we may push a little bit higher. Now, the SPX is a bit overextended. It's no ways near as overextended as the Russell is, or the NDX was. The NDX isn't overextended necessarily anymore. And right now we really don't know where we're going here. So keeping in mind we are overextended, we could continue to creep higher. I'd say it's more likely if we do go higher, it's only going to be a little bit higher, and then we're going to roll over and probably come back down into this channel here. I do still think that this run here is a little too steep to hold. If we come over to the Dow pretty much did what we thought it was going to do. It came up, we ran right up into old highs. We slightly exceeded them, but we backed off. Again, we're at a decision point here in the markets. We could go up, we could go down. If we are going to go up, I would feel better going long if the market would back off a little bit first, probably to this 15.3 area, and then go higher. If we go higher from here, I believe the move higher is going to be somewhat limited. Again, we are overextended, but not terribly overextended. We're not that far over our 50-day moving average. So again, a 50-50 shot could go either direction. If we're taking a look at the NASDAQ, as you probably know, the NASDAQ was severely overextended. This run here was the longest consistent run we've had since 1990 in the NASDAQ. So in the last 20 years, we haven't seen a run this consistent. That's 14 or 15 up days in a row without any sort of sideways movement or pullback. So that was pretty rare, pretty overextended, very, very aggressive run. Not surprising with Google earnings that came out that we had a pretty hard sell-off in the NASDAQ. Notice though it just sold off right to a support level. This is nothing bearish, nothing to be concerned about. But again, the NASDAQ's at a decision point also. So could break either way from here. I think that this is one of the indexes to watch to get an idea which direction the Russell's going to go. Because if we get a strong bounce off of here, now that this has reset itself, then the Russell's going to tend to follow it. And even if we break down to the 3,000 here, we're still not going to be bearish, but at least it'll also pull the Russell down probably and have that reset a little bit. So if we scoot over to the Russell, we were talking last week. We thought we may go a little bit higher, but we should pull back into a trend channel. Now I moved the top of this trend channel a bit higher because the market told me that my trend channel was drawn a little bit too low. You notice we had a gap up over a trend channel here, and I expected the market to fall back down into it. Didn't happen. It continued to just climb this channel. So what I did is I came in here and I tucked the channel a bit higher so that it represents the top of the trend channel. If you look at this yellow line here, this is the steepest move the Russell's had in a very, very long time. I don't think it's ever had a move this steep, this long. I was going back through some periods of time over the week, and I couldn't find anything. If I looked a little harder, I might be able to. We've seen the Russell go up this steeply before, and we've also seen the Russell go up more points before, as much as about 160 without any sort of a meaningful pullback. And realistically, this is only about 100, 105 points. But we haven't seen the Russell go up 105 points, no pullbacks, at this steep of an angle. So that's very telling here, and to me it's a little bit indicative of possibly a blow-off move on the longer term charts, possibly indicating that we may be coming to some sort of a longer term top here. We shall see, but for the short term, the direction this goes is going to be completely dependent on what the other indices do. If we watch the bounce on the NASDAQ, we'll probably come up to the 1060. I don't think we have, I did some measurements on this last pattern, and if I measure it as wide as I possibly can, we have a move potentially to 175, 180. If I measure it more conservatively, we're done at 150. I'd say we go somewhere in the middle there. We're probably done at around 1060 here. So wouldn't be surprised if we possibly hold this trend line at 1060 if everything else goes up. After that, very, very likely we're going to settle off and come back down here. So let's take a look at what happened during the week with our positions. Obviously, all our July positions are closed. I'll just let you know when I closed them. The July Bearish Butterfly, we ended up closing on Tuesday. We ended up closing this at a gain of $10,624, which is about 21%, I believe. And that was a good trade for the month, despite all the price movements. The problem was we were up actually 13,000 at one point in this trade, but the market with this continual, very, very aggressive up move, I did all I could to stay with it, and I just got sick of fighting it on Tuesday. Didn't look like the market was going to, when we had that minor pullback, didn't look like we were going to get anything significant there, so I just closed the trade out. If we go to our ROCK trade, this here was basically traded through that whole very aggressive up move. It was difficult to stay with. Wasn't able to gain a whole lot of profit in here, but I did end up closing the trade at a profit. We ended up at about $2,517 after commissions with the very aggressive up move we have, which I don't think is bad. So about a 5% profit we pulled on the ROCK trade. And the last July trade we had was a V Condor, which ended up being closed out at a $3,830 profit for the month, which is a pretty fairly, I mean, that's a good return for this particular trade. So the July trades in general went pretty well. We also, last week we had an August Bearish Butterfly that was open, and if you remember when we talked about entering this thing, and the day we entered was down in this area here, and we said that we've had an aggressive move down into a support level, and we're likely to have an up move. As a matter of fact, I was projecting a 1060 price target for August at the time, which may actually be higher now, but at the time we were projecting possibly 1060. Everybody laughed at me, thought I was crazy with that. However, that's what I was projecting, and I had openly stated that I'm not going to enter this trade live because the market is too likely to outrun the trade to the upside, and that's exactly what it did. This type of a move for a bearish positioned trade, just like this one was, it was just too much of a move for it. So we ended up getting blown out to the upside here and taking our max loss, and I closed that trade out on, I believe, Monday, and it was slightly under our 30% loss. So that was the August Bearish Butterfly. So all those trades are closed. So let's take a look at what we had open for August. We had the August V Condor, which also went through that stressful thing, and V Condors actually do very well with fairly aggressive up moves. However, this one is down some money. Now, nothing to be overly concerned about here. We're down about $2,400. We are terribly overextended, and this is what we look like on our graph. You can see that we've had, we got our V here that's significantly underwater, and our profit in general is starting to drop out. So what we're going to do here is we're going to continue to trade it the way we trade it. Very, very unlikely we're going to get pushed out to the upside, and we have a $5,000 maximum loss on here. We'd have to get all the way to 1070, and we'd have to do it quickly. If it goes there slowly, if we get any kind of time it backs off, it should be fine. If we get a hard reversal here, we'll probably end up taking a small loss for the month. If we get a moderate reversal, the market just slows down. We'll probably still make a couple $1,000s, but it probably isn't going to be any kind of a banner month here. We're just going to have to wait and see how this pans out, but you know, I don't think we're in too much trouble. We've come out of worse situations in this particular trade, so everything's looking okay here. And that's all we had for open trades as of last week. Since we did close the Bearish Butterfly in August early, I went ahead and entered early. And my comment for September is I really, really like this entry for Bearish Butterfly. So I think we have a very high probability month. The likelihood of the market outrunning a Bearish Butterfly after it's been extended like this would be very, very unlikely. So I was very happy to put that on. And if we take a look at that, it's right here. We entered this on Tuesday, the 16th, after the day after we pulled out of the August Bearish Butterfly, which was early. It was probably about 10 days early here, but that's okay. I really liked the pricing of the market at the time. So we come in here, we bought 10, 20 butterflies, and that gives us a 1020 control point. We have an add point at 1060. We have an add point at 1080. For us to get fully scaled into this would be unlikely. I seriously doubt that's going to happen. You never know. But like I said, as of right now, I am liking this trade. Something that might change my mind if we run down hard to a support level, then we might get a little skittish to the upside because the market's been so darn bullish. But as of right now, this is looking really nice, and I'm liking the entry. Also, when we closed the ROCK trade on Wednesday, I went ahead and entered a new ROCK trade. I entered 1030 butterflies. I entered 1070 butterflies, and that was on Tuesday. And as of right now, the value of this is up almost $1,000, and this is what the position looks like here. There's our 1030s, there's our 5 1070s. I like this trade this month as long as the market doesn't pull back too hard. If we get a harsh pullback, we're going to end up kicking these 1030 butterflies back. But if it stays stable and just continues to creep up, then this should be a really nice trade this month. And I also finally entered my August M3 trade, and we can take a look at that. That was entered on Friday after the previous trade expired, and I entered this as 5 1060, 1010, 1030, 1060 broken wing condors, and 5 960, 1010, 1040, 1060 broken wing condors, which would be similar to having 1010 butterflies with 5 1010, 1030 verticals and 5 1010, 1040 verticals. And then we went ahead and balanced that off with 1 1020 call. And as of 3:30 on Friday, we were minus 34 delta. Our theta and vega numbers look good. On the analyzed graph, it looks like this. If we cut this down to one line, we are a little bit more negative delta than normal, but I'm also not that concerned about my upside risk here. And I wanted to give it a little bit downside room because if we pull back, we do happen to pull back, to come into 1020 is very, very likely here. So. And that is the M3 trade. And last but not least, we did enter a September V trade, which is right here. That was actually entered on Friday as well. And this is posting up money already. If we take a look at this, this is going to be really nice. And like I said, the biggest issue with one of these is a harsh collapse of the market, and that would be tough. But this is a good entry. I like it as long as the market holds up. All right, and that's it. So we're a little undecided on where the market's going for the week. We are entered into 2 of our September trades. We're fully entered into our August trades, and I'll keep you updated with any changes. Thank you, and have a great week, everyone. Good night.